Our topic in this Sage Pastel accounting lesson is the analysis and interpretation of bank reconciliation statements. A bank reconciliation statement is a very powerful tool or control instrument in the hands of the management of an organization. We know that it is there to check the accuracy of transactions, but it also helps management to exercise control over cash so that it gives a very clear picture of what is happening in the organization's bank account. It also draws attention to any cash flow problems that might occur, including internal theft and fraud. Let's look at an example that demonstrates this. We're going to analyze the bank reconciliation statement of Park Traders. Our information tells us that the internal control of Park Traders regarding cash transactions is not satisfactory. The owner suspects that the cashier, who is responsible for receiving cash and depositing it in the bank, is stealing some of the money. The question requires that you use the information in respect of the cash situation of the business to answer some questions. Let's check the information first. And as we check the information, we're going to consider the reconciliation statement that was drawn up by the cashier. The bank statement received from the bank on the 31st May 2015 reflects a credit balance of $35,600. So the balance as per bank statement, there it is, $35,600. It's 100% correct. This balance includes interest on the current account. So interest on current account is added in, as well as the bank charges of $190 and a dishonored check of $720 that has not yet been taken into account by the bookkeeper. So $190, remember, bank charges subtracted from the bank account, as well as a dishonored check, which is subtracted. So $190 for the bank charges, as well as $720 for the dishonored check, is subtracted from the bank account. However, our bank account shows a debit balance of $42,800. There it is under bank account balance on 31st May 2015. This balance includes an amount of $9,180 that was received but not yet deposited in the bank. So in other words, we need to subtract $9,180 for the purpose of the bank reconciliation. We can reverse that deposit. It also includes, though, the following checks issued but not yet cashed. Take a look here. 560 plus 390 plus 830 plus 540 plus 600 plus 830. So if we add all of those up, it gives you a total of 3,750. So we compare 3,750 to what we have as outstanding checks in the reconciliation statement. But it doesn't add up. 2,090 is what she has got in the bank reconciliation statement. So the cashier who receives all money and deposits it into the bank account compiled the following. Now that we've examined all the information, we can come to some conclusions and answer the questions. The first question that is asked is, determine whether the cashier has stolen any money. And if so, calculate the amount stolen and explain how the cashier tried to conceal the theft. Well, firstly, we have already noticed that the checks do not add up. The outstanding checks amounted to $3,750. The bank balance is therefore shown as $1,660, being the difference between $3,750 and $2,090. What can we conclude from that? Yes, we can conclude that the cashier has stolen $1,660. But the next part of the question is, how did she conceal it? The cashier could have written up fake checks and then taken the cash from the bank account and never presented the checks for payment. This is one way of concealing the theft. Let's look at the next question. The next question asks us to evaluate the internal control procedures critically and make recommendations. Firstly, whenever you look at the control process and where in the control process it's going wrong, the first thing that should be a red light is that the cashier is responsible for all monies, all deposits, and all checks. No one employee should be responsible for all of these functions. So the first thing the owner should do is shift some of the monetary responsibilities to another employee, so there is always someone to check up on someone else. So that would be our answer to the first part of the question. Financial duties should be divided. Let's think about how. What would you recommend? At the moment, the cashier should not be responsible for receiving money, recording it, depositing it, and also be responsible for drawing up the bank reconciliation statement. All of those tasks should actually be done by 4 different people, each one being responsible for checking up on another. Originally, when we received the money, we put it into our bank account, which means we debited bank and we put it into bank due to a debtor paying, so we would credit debtor's control. Now that entry needs to be reversed because the check was dishonored. Therefore, we would now decrease our bank account, which means that we would credit our bank and then increase our debtor's control account by debiting it, because the debtor still owes us that money. Checks are mainly cancelled due to insufficient funds, but there are many other reasons that we can cancel a check. We could cancel a check if it isn't signed, if the amounts differ between the numbers and written amounts in words, if the check is post-dated, in other words brought to the bank too early, if the check is stale, if the check is damaged, if the signature differs from the proof signature slip at the bank, or if there are any errors on the check, such as the date is not correct or the writing on the check is untidy and not clear. You may be asked to name 2 or 3 reasons for a check being cancelled, so remember them well. Time now to test what you've learnt in this lesson with a series of multiple choice questions. Each question will appear for 5 seconds and then the answer will be revealed. Keep a check to see how many you get right. Are you ready? How did you do? Remember, the only way to do better is practice, practice, practice.